Are you worried about inflation eating into your hard-earned savings? Let's take a moment to understand what inflation actually is. In simple terms, inflation is the increase in the price of goods and services over time. It's like an invisible force that slowly but surely erodes the purchasing power of your money. Imagine this. You've saved $10 today, but next year, due to inflation, the same $10 might only buy you $9 worth of goods. This can be particularly concerning if your income or savings aren't increasing at the same rate as inflation. It's like running on a financial treadmill where you're working hard but not moving forward. So yes, inflation can be a bit scary. But worry not, because inflation isn't always the financial grim reaper it's made out to be. There are proven ways to make money during inflation. First, consider investing in stocks. Now, you might be wondering, why stocks? Well, during inflation, certain sectors like technology and consumer goods often perform well. This is because these companies can pass on their increased costs onto consumers, thereby protecting their profits. Think about it. When was the last time you saw the price of a smartphone or a cup of coffee go down? Exactly. Even when raw material costs rise, companies in these sectors can increase their prices, ensuring their profit margins remain intact. But it's not as simple as throwing your money into the stock market. You need to be strategic, do your homework, and invest wisely. Research is your best friend here. Look into the financial health of companies, their market positions, and their ability to weather economic storms. And here's a golden rule: diversify. Don't put all your eggs in one basket. By spreading your investments across various sectors, you can mitigate risks and increase the chances of earning good returns. You might have heard stories about people who struck it rich by investing in a single stock. But for every success story, there are countless others who lost their savings. So diversify, diversify, diversify. While volatile, stocks provide an avenue to not just preserve, but grow your wealth during inflation. They can be a powerful tool in your financial arsenal, helping you navigate through choppy economic waters and come out on top. Next, let's delve into the realm of real estate. As we navigate the labyrinth of inflation, real estate often emerges as a beacon of hope. Why, you may ask? Well, real estate is a tangible asset that frequently appreciates in value during inflationary periods. This appreciation can serve as a protective shield, fortifying your financial position against the erosive impact of rising prices. Now, let's consider rental income. Rent, unlike some fixed income investments, can be adjusted over time. So, as the cost of living increases, landlords can raise rents in line with inflation. This income stream can serve as a powerful hedge, helping to offset the effects of inflation on your purchasing power. But remember, every silver lining has a cloud. Investing in real estate is not without its risks. The property market can be volatile and values can fluctuate. Additionally, properties require maintenance and can incur costs that eat into your returns. Like any investment, real estate requires due diligence. You need to research the market, understand the potential costs and returns, and consider your ability to manage the property or afford professional management. In the grand scheme of things, though, the potential benefits of real estate investment can outweigh these risks, especially during inflationary periods. It offers the potential for capital growth, rental income, and a buffer against inflation. Thus, real estate can be a tangible asset that appreciates over time, providing a buffer against inflation. Another strategy is to invest in precious metals like gold and silver. This tactic may seem as old as the hills, and there's a good reason for that. Precious metals have been a reliable store of value for centuries, standing as a traditional hedge against inflation. So why is this the case? Well, unlike paper currency, whose value can be eroded by inflation, precious metals retain their value over time. When the cost of living goes up, so does the price of these metals. They rise in value because they are finite resources that cannot be created at will, unlike money. Think of it this way. If you had stashed a gold coin under your bed 100 years ago, that coin today would still be able to buy you a decent suit, just as it could back then. Compare that to a paper bill from the same era. and you'll see the clear difference. Moreover, buying and selling precious metals is a straightforward process. You can purchase gold or silver bars, coins, or even certificates from a reputable dealer. And when you're ready to sell, you can easily convert these metals back into cash. However, like all investments, precious metals come with their own set of risks. Prices can be volatile, and they don't generate income like stocks or real estate. But despite these drawbacks, they remain a solid option for those looking to hedge against inflation. Remember, precious metals can serve as a safety net during inflationary times. Lastly, consider inflation-indexed bonds. Now you might be wondering, what exactly are these bonds? Well, they're a type of government-issued investment that adjusts with inflation. Picture them as a life raft, bobbing up and down with the tide of inflation always remaining afloat. So, how do they work? When you purchase an inflation-indexed bond, the principal value of the bond increases with inflation. This means that the interest payments you receive, which are a fixed percentage of the principal, also increase. Essentially, if inflation goes up, so does the value of your bond and your interest payment. Now, what makes them attractive during times of inflation? The key lies in their guaranteed return above inflation. Unlike other investments that may lose value due to inflation, these bonds are designed to keep pace with it. They provide a return that is always a step ahead of inflation, ensuring that your investment grows in real terms. Inflation-indexed bonds are not about getting rich quick. They're about preserving your wealth and ensuring steady growth over time. They provide a level of predictability and security that is rare in the world of investments. So, if you're looking for a safe harbor in the choppy seas of inflation, these bonds might be just the ticket. They allow you to navigate the waters of inflation with a sturdy, reliable vessel. Inflation-indexed bonds can offer a reliable and low-risk strategy to beat inflation. So, are you still worried about inflation? Let's take a moment to revisit the 4 strategies we've just discussed. First, we explored investing in stocks. Remember, companies typically increase their prices during inflation, which can lead to higher profits and potentially greater returns for investors. Next, we dove into real estate investments. Property often appreciates over time, making it a reliable option during inflationary periods. Then we considered precious metals. Gold, silver, and others have intrinsic value that can serve as a hedge against inflation. Finally, we examined inflation-indexed bonds. These offer returns that are adjusted to keep up with inflation, ensuring your investment maintains its purchasing power. These strategies, however, are not meant to be pursued individually. The key here is diversification. Spread your assets to reduce risk and increase potential gains. Always remember to do your research before making any investment decisions. With these strategies, you can turn inflation from a threat into an opportunity. Remember, the key to financial success is knowledge and action.